Welcome on board Warren Harris, the CEO and MD at Tata Technologies, joining in on the show right now. Warren, what's led to the revenue softness in the fourth quarter, especially the services segment for you?
I would challenge the perception that that growth has not been strong. If we look at the full year, we grew our business by 15.9% in Indian rupees. If we look at services specifically, we grew over 13%. I signaled in January that we had some runoff at VinFast as we transitioned from the completion of our engineering work to launch support. And so if we put VinFast to one side, we actually grew our services business sequentially by 10%. And in the full year, again, if we put VinFast to one side, we've grown our business by a sector-leading 30%. So momentum is strong. You know, we're always going to have an exposure to new energy vehicle companies because a lot of innovation comes from those companies. But there are some volatility issues that we have to grapple with, and I think we've successfully done that in the context of the last fiscal year. So we're very pleased with FY24 and the solid finish to the year that we had in Q4.
Right. So for VinFast, the worst is over, or there could be a little trail of impact in the Q1 as well.
There's a certain amount of overhang that we'll grapple with in Q1, but we're largely out from underneath it, and we're not seeing a drop off in demand as far as the market is concerned. We're not seeing a runoff in any other account, and so we're looking forward to a very good fiscal year 2025.
Right. You know, you mentioned in your PR, in your press release, that you're looking at a major deal wins as well. Which verticals will drive these, and what could be the potential size of these deal wins?
Well, we're in the final stages of converting a number of deals, and you know, they range from $5 to $10 million deals all the way up to mega deals. We never celebrate a deal until it's done, but we're very encouraged with the progress that we're making on a number of the deals, which will be, we think, as transformative as the BMW deal has been. So again, I think I'll have further information for you at the end of our first quarter. You know, the beginning of the calendar year is typically a quiet period in terms of large deal conversion. We're starting to see that pick up now, and again, by the end of the first quarter, FY25, I'll certainly have improved visibility in terms of the deals that we've closed and what that will mean as far as the full fiscal year is concerned.
So given all this, we will have FY24. Will that be better than FY24?
We don't provide any guidance in terms of growth rate, so I'm not going to give you any specific numbers. But what I will say is that our aspiration is always to meet or exceed the growth rates that are expected of the markets that we serve, and certainly the industry watch organizations are still bullish about the transformation that's going on in manufacturing in general, and specifically in automotive and aerospace and transport, construction, and heavy machinery, the three verticals that we support.
Your margins have been in a narrow band. When is it that you see an improvement coming in?
Now, when you see the transition from a large customer like VinFast, you know, that does have an impact upon margins, and so we have weathered that particular challenge. The teams have been redeployed, and we certainly expect the upward trajectory in margins in the coming quarters. We certainly are not complacent about the position that we are in. The North Star for us, as far as margins is concerned, is over 20%, and that's what we are, you know, building our operating plans to support.
And just to confirm, 20% possible in FY25, or this is the medium-term target?
It's more of a medium-term target, but we certainly expect improvement.
Okay, Warren, thank you so much for joining in. We'll take a very quick break on that note.
If you like this video, then like, share and subscribe to ET Now.